Hello, how YouTube family? Welcome back to Soft Talk FX Academy with Mr. Walls. So I'll be taking you through a journey of how I use my Fibonacci retracement tool. For those that has been following me for a while, you would have seen me put a Fibonacci retracement tool into use over the time. Recently it has formed an integral part of my entries, especially, I take my entries on 15 minutes. It has formed it Fibonacci retracement tool has formed an integral part of my uh confirmation and entries. And with the new strategy I introduced, which is DHL strategy, daily highs and low strategy, Fibonacci retracement tool is a very important part of the strategy. So I'll be showing you how personally I make use of Fibonacci retracement tool and different ways I use it. Let me put it like that. Different ways I use my Fibonacci retracement tool. So first and foremost, what is Fibonacci retracement? This is a particular tool in the marketplace, that it comes with your what's it called, your MetaTrader or your trading platform. Is a tool that comes with your trading platform, and it was named after the person that designed it. I think his name is John Fibonacci or something like that. So it is a particular tool that has been designed to catch some levels in the market. It has been designed sequentially to catch some levels in the market, and the levels are automatically on the Fibonacci tool, but there are particular levels I make use of, based on research and what I've back tested over the time, what has worked for me. Because I used to tell my students that, see, when it comes to this trading journey, it's a journey of self-discovery. After we teach you everything we need to teach you out there, you have to self-discover yourself. You have to self-discover yourself. It's just like dishing out the principles to you, then you make use of it, then in line with your experiences, with your personal research, you come up with something new entirely. So based on my research, I'm actually giving you out the solution I've come out with based on my research over the time in this market. So uh, the number one thing I use my Fibonacci tool for is to determine my premium price and my discount price. Okay, for instance, if price is going up, like you see in this first diagram, if price is going up, price will be giving us series of higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low. You don't just like everyday commodity that we buy in the market. You don't want to be buying when the price of a commodity is high. For instance, a phone. You want to buy a phone, assuming the phone, the price is when they release the phone, the price, let's say the price was released at let's say $1,000. All of a sudden, you want to buy the phone, you go to the store, you realize the price has increased to $5,000. The price has increased to $5,000. For every reasonable person, uh, you want to be buying at a low price. You want to have a good value for your money. So that's where Fibonacci comes into place. That's where Fibonacci retracement tool comes into place. Now, let's say the price is 1,000 at this point. By the time the price is going up, going up, going up, going up to this point, the price has gotten to 5,000. So if you want to buy, you want to join this move, this buy, that's why I encourage people, don't chase after price. Price will always retrace to give you another entry. So if you miss a move, just relax. It will always return to give you your own entry. So if price has gotten up here and you want to buy, and it is a popular saying in this sector, in this sector, that you should buy low, sell high. That's where this concept of discount price and premium pricing has been introduced or come into being. So if price has gotten up here, look at where my cursor is, price has gotten up here. If you want to join this move, what is expected of you to do is for you to wait for price to come back to below 50%. Any price above 50% is high. You want to buy at a discount price, as like with the analogy I was making, assuming this is 5,000, price is $5,000 here. You have to wait for price to come to any price below 50%. Personally, I don't trade 50%. I have a time I trade 50%. I'll just follow me, I'll show you where I consider 50%. But in the case of catching a move like this, the price has given me an impulsive move going up. I don't trade 50% in this case. I start looking for my opportunity to buy, to join this buy at 62%. 62%, 70.5%, 79%. These are my discount prices that I'm looking price to come into. That's why you see me, I emphasize it a lot whenever I'm trading my daily highs and low strategy. You see me loading up my entries from 62%. Price will always return to 62% and below. It's good when it returns to 62%, but when it comes below, that means you are having a much discounted price. I believe you are getting the logic, guys. You're having a much discounted price. Instead of you buying at $5,000, you just wait for price to return to a discount price. That's why we emphasize below 50%. So any price below 50% is good to buy. It's good. Any price below 50% is good. Now let me take you to when it comes to the issue of a sell. It's called a premium price. Price has, giving you higher high, lower highs, lower low, lower highs, lower low to the downside. You don't start selling here below 50%. You don't start selling. It's not a good place to sell. Price will always return into a premium price. That's why you see all of a sudden price has been going down. You'll be enjoying the sell. All of a sudden price will come back up because price will always return to a premium. You sell at premium. Hope you're now getting it. The concept of you sell high, you sell when the price is high, you buy when the price is low. That's where the concept is. That's where that's how we've interpreted the concept into this. So when the price is low, that's when you don't want to be buying anything above 50%. You want to be buying when the price is low. When the price is low, when the price comes back into discount, price will always return into discount whenever any move is taking place. Price will always return into a discount price, and price will always return into a premium price, So let me take you to the real chart and show you a few examples. Let me show you some few examples on this. Few examples. Let me look for it. Okay, I think I'm able to get one. Okay, look at this move. You see that price is actually going up here. So price is going up here. And I must tell you, if you're looking to catch a retracement, to catch a move at the retracement, it is best done when the market is trending. You don't start, you don't start dropping your Fibonacci on a consolidation market, on a consolidation market. It is best used when the market is trending. That's when I use it. Like I said, I'm showing you this based on my experience. I use it when the market is trending. When the market is trending, and that's the strength of my daily highs and lows strategy. The market must be trending. That's one of the major characteristics, major things I look out for. The market must be trending. So look at this move. It's trending up. So you must identify whether the market is trending or not. So if you don't know how to identify a trending market, look one of our videos we have there where we talk in detail about a trending market. Look for it, watch it. I think it's about 1 hour video or 1 hour plus video. So it's very detailed. Just look for it and watch it. You get to understand the trending market. So let me bring my Fibonacci tool. Look at it. Okay, if you take it from one swing point to another, see, this is a break of structure. This is a slight break of structure with just maybe a fractional pip. a slight break of structure, fractional peep. So what I do is after the break of structure, I told you I don't start loading up my buys from this point. Price will always return into a discount price. And look at what has happened there. After breaking this structure with a fraction of a pip, then price return back into discount. I told you any price, sometimes it will get to 50% and start going up. I'm not interested in catching that kind of moves. I want to see it trade at least below 50%. So that's when I start looking at my 62%, 72.5%, 79%. And if it comes lower, all well and good. All well and good. So look at this trade. That's how I start catching those nice trades on our Telegram channel. So if you slap it here, you see price return back to 62%, pam, price is going up. If you put it up here, price still returned into 79% zone, and look at it, price is going up. So there's no magic about these things, guys. This thing works. This thing works. Let me show you in the case of a sell. In the case of a sell. So first thing I look out for is my break of structure is very important. Break of structure. This market is trending down here. My break of structure, then I bring out my Fibonacci tool. I put it from one swing point to another. And what did you see? One swing point to another. This can be used on all time frames. You can do the same thing on a daily time frame. If you identify a trending market on the dailies, you identify a trending market on 4 hours on. But what I do is I like to identify, or I like to trade with the trend of the market. So I look for what's happening on the, that's if you want to go a long time, look for what is happening on the higher time frame. Then I execute my entries on 15 minutes, 5 minutes, and 1 minute, as the case may be. So look at it. Look at this impulsive move to the downside. Just imagine you are placing yourself from here. This move is going down. You start placing yourself. It would have taken you out, because price will always return into a premium zone. Price, and that's what on my Fibonacci on my mobile phone. That's the area I've named my hot zone. Price will always return. Look at it perfectly into these areas before going down. Perfectly. Let me still take it down. Let me take it down. Let's put it here as well. From one swing point to another, I told you guys. Look at what happened there. Price returned into 50%. In this kind of situation, I wouldn't have taken the trade. I want to see price return to at least 62% and upward. So when it comes to trading, you must be disciplined. You must know what you are looking at for. You're not just taking trades carelessly. All your conditions must be met. All your conditions must be met. Your conditions are not met, no trade. Your conditions are met, you take a trade. That's trading for you. Okay, let me show you one last example on this before I show you another way I use my Fibonacci retracement tool. Okay, look at this scenario. I want to show you this scenario. This scenario where we have in this scenario, okay, we price has not given us a break of structure here, but okay, we can say this is a short-term break. This is short-term structure break here. This is short-term structure break. If you go to 5 minutes, you see that this is a short-term structure break. But in a situation whereby price has not really come, assuming price didn't get to 62%, like what we see here, slightly, we just see it trade slightly below the 50, below the 50%. And it has not, assuming it has not even come near the 62% at all, what I'll be doing is I'll just wait for price to still push up and drag it further up. You see, after this break of structure here again, price eventually descend to my discount zone, and I'm able to make a decision. It came back into 62% perfectly, and price, you see price going up. You can see it from there, price going up. No biggie about this. Very simple how to use a Fibonacci tool. So let me show you another instance where I make use of 50% level. I only make use of 50%. I make use of 50% to when I'm trading an institutional candle. I use it to determine the 50% of an institutional candle because, you know, the big boys, the market makers, they will always trade back into 50% when it comes to an institutional candle area. And that's what let me show you. Let me show you this on step index. I have a setup I'm looking at on step index at the moment. I have a setup on step index at the moment. Very beautiful setup. Let me just okay, perfect. Let me share my step index screen now so that you guys can see this. Okay, because I like to show a live example. So if you are conversant with institutional trading concept, you're going to have an understanding of what transpired here. Look at this area has been manipulated by the market makers, and after manipulation, a break of structure to the downside, price created equal lows. This area of liquidity, they will always trade back to, this is the move that cleared the liquidity. So the move that cleared the liquidity, let me show you 50% of the move. They will always trade back to 50% of the move that cleared liquidity. This on step index, 50% of the move that cleared liquidity. And look at it. The 50%. Okay, maybe you guys are not seeing it clearly. Okay, now 50% of the move. That's where I've marked. That's where I put my horizontal line. 50% of the move, they will always trade back there. So this is the only situation where I use 50% on my Fibonacci retracement tool, because this is where I'm looking to catch my first entry. This is where I'm looking to catch my first entry. Although I look at other things, if we go to 5 minutes, the lower time frame you go to, the more information you get to work with. So if you go to a lower time frame, you get more information. Okay, this another institutional candle inside this 5 minutes institutional candle inside a 15 minutes institutional candle. You see, on 15 minutes we look for the equilibrium, which is the 50% point of this entire move. And when we go down to 5 minutes, what are we seeing there? We have another institutional candle on 5 minutes, which is giving us a kind of confluence. So if I'm taking this trade on step index, I'm looking forward to take my first entry at the 50%. Sometimes price, don't let me deceive you. Sometimes price will just tap into the opening of this move and start going down. Price will tap into the opening of this move and start going down. So it depends on your risk appetite. Sometimes I place my first entry at the opening of the move and my second entry here. So it depends on what you want to play per time. It depends on what you are looking at per time. But I look at other parameters. But this is the only situation whereby I use 50%. 50% when it comes to trading in the institutional way. So if you are coming across our channel for the first time, you know how we do it. Click the like button, click the follow button, turn up the notification bell. And if you want to join our free analysis group on Telegram, free signal group on Telegram, check the description box. You'll see our link there. Join us, take our trades with us. Let's win together. Let's kill this market together, guys. Looking forward to seeing you there. If you have any question, come on Telegram. You see my personal handle there. You send me your question. I'll attend to it as soon as possible. Thank you for believing in Soft Talk FX Academy. See you some other time, guys.